All right, students. Right, can you all hear me? Do you all hear, students? Please use the chat option in the YouTube. Can you all hear me clearly? Students, do you all hear clearly? So I hope, guys, you all can hear me clearly. So this is related to what, guys? The bank account and bank reconciliation statement, right? Okay, you all know what is meant by bank account. I hope so. So bank account means what? It is simply what, guys? An account which is used to record like what? Which is used to record all. What do we record in the debit side? Or else we call the plus side. What do we record here? All cash and check deposits. And what do we record in the credit side? We record all what? Check payments, no? We record all check payments as well as and put the like any charges that is made by the bank, right? Okay, so because right, and you all know this side is known as the credit side, or else we call it as the minus side. And you all know, the if I ask from you all, guys, bank account has dual functions, answer is yes. So why we call bank account as well as cash book has dual function? Because you know, normally every transaction is identified through source document recorded in that prime entry book and then ledger, no? For example, purchase journal is there and then we have purchase account, sales journal is there, then we have sales account. However, this cash book and bank account, we don't have cash book and cash account, we don't have bank account and another bank account, because it is the same bank account and cash book is the prime entry book as well as the ledger account. That's why we call it as dual function. So you know that we also record the opening balance in the bank account. Normally in which side we do record it? We record it in the debit side. So I hope you all might be knowing the reason how to decide which side to record the balance. It all depends whether it is an asset, liability, equity, right? So in this case, this is an asset, no? That's what we would record in debit side, right? However, I hope you all might be knowing the bank can provide us a facility called Puta. The bank can provide us a facility called what? The bank overdraft facility. So there's a facility provided by the bank, something called overdraft facility, Puta. So what is this overdraft facility? You know, the bank allows the business means us, to pay more than whatever that is available in our bank account. For example, if we have only 1,000 rupees in our bank and we have to make a payment of 1,005, say, so what we can do is we can make 1,500 payment and we are able to say the bank, please allow that extra 500 payment, I will pay you later. So the bank would consider the request and then they would provide. that facility. So if that facility is like executed by the business, used by the business, now Buddha, we owe 500 to the bank. No. Therefore, there are situations that there we can have what balance? A minus balance or a credit balance. Normally, bank account has a debit balance, but in some situations, due to overdraft facilities taken, bank account can have a credit balance, right? So whatever we record here is what? You all know, whatever that is deposited in the bank by us. Normally we deposit cash or else check deposits. What's a check deposit? If we receive a check from one of our customer and we do deposit in our bank, we add it to add there. The reason is because the balance in our bank account increase. And if we issue a check, normally the person who obtains the check from us will present it to the bank for payment. No? So therefore, when you issue a check, the balance would decrease, as well as if there is any bank charges, because bank will not do services freely. No? So if bank charges from us, they would directly minus from our account. So this is the basic idea of bank account, right? I hope most of you all are aware of bank account because your O levels are close by, right? Even I had the theory class, we completed like 6 months early itself, everything is been done for them, right? So I thought of just helping you, some of you all who need help through online, right? So this is going to be a normal interface of a bank account. Now you might think, so then what is this bank reconciliation statement? You know, Buddha, when we prepare bank account, our bank would also record the same transactions. No, the bank will always, they have a record of every customer's account. No, so whenever transaction take place with related to our account, our bank also would be recording that. However, it is not known as bank account. The same bank account our bank will maintain as something called what? Something called as bank reconciliation, bank statement, Putha, not reconciliation, bank statement. So what is it? When we prepare bank account, Putha, our bank also would record the same transactions in something called bank statement. And end of the month, they send us a copy, right? Because to say these are the transactions that has taken place with related to your account, and this is the final balance end of the month. So when we record the opening balance, the bank also would normally record the opening balance. So the third column is normally used to record the balance. And if you notice, we have a ledger account, we have an account to maintain what the deposits and to record the deposits, the plus things, and to record the minus items. Bank statement, there is nothing called like two sides. They are just preparing columns. However, Buddha, they will name the columns as credit and debit. So please don't misunderstand. Whatever we debit, the bank will not debit. You might be wondering why, sir? It's the same thing that we and the bank are doing. Yes, but Buddha, like when we debit or when we deposit, we call it as debit. Why debit? Asset increase plus. So when we deposit, we say plus, bank also says plus, but we say debit, bank will say credit. Reason? Now double entry, okay? Reason is what you know. Our money for us is put a asset, that's why debit. But our money for the bank is a liability. No, they maintain customers' money. Therefore, whenever we deposit, bank also would add, our accountant also would add Puta, but bank will call it as what? Credit as plus. That's why when you always pay from something from your bank account or your parents' bank account using debit card, the message that your parents' mobile phone receives is what? Your account is credited. So which means what? When you pay, your account is debited, which means what? For us, debit means plus, but for bank's point of view, debit means minus, okay? For us, credit means minus, bank's point of view, credit means plus because it's liability for them. So for your understanding, let me take some values here, right? Let me take some values here. Instead of writing like this, let me go with some values now. So let's understand first of all how to prepare this bank account and how to understand this bank statement, right? So let me take a simple value here. Assume we have 100 rupees in the bank and we had a deposit, a check or a cash deposit of, we'll say 200, again a deposit of, we'll say 300. So altogether, and I'm going to write some days. This is January 6 and January 20. And on like January 10th, we had made a check issue, right? Okay, we had issued a check. Alright, issued a check worth rupees, we'll say 250. And on like 124th, again like there is some charges, we'll say some bank charges of like 100, right? Or we will say like bank charges of around like 20 rupees. Then how to find out the balances? You all know that 100, 200, 300 from 600. If we minus 270, if we minus 270, it's going to be 330 is going to be our closing balance. So how would the bank normally record this, Putha? How would the bank normally record this? The brought forward, they record 100, and in date order on 1/6, right, there was a deposit. So they will say on 1/6, 200, and they update our balance 300. And the next thing they would record is this date. On 1/10, there was a check issue. How much? 250. And now they say your balance is 50. They update the balance, right? And then on 1/20, they will say again a deposit of 300 and they update the balance 350. And then on 1/24, the charges, they minus 20 and they update as 330. So did you all notice it's the same thing happening which is done by us as well as with our bank. So our bank says your balance is now how much? 330. Our accountant also would say it is 330. So you notice these two balances should be the same. Now let me talk about today's topic actually. What is this bank reconciliation statement? Then if these two balances which should be equal, if it is not equal, Putha, that is due to some reasons, no? Either we had not recorded or the bank has missed something. So if this is not equal, we have to prepare something called bank reconciliation statement. Okay, bank reconciliation statement. I hope now you all understood the concept of bank reconciliation statement. What is it? If the bank account balance prepared by the business and the bank statement balance which is prepared by the bank and sent to the business should agree, no? If those two do not agree, means there are some reasons, no? So we have to make sure we identify and record those reasons. For that purpose, we prepare bank reconciliation statement. Can I get a reply? I think the Zoom link is not working. It is live streamed in YouTube. I hope you all were aware about that. So can you all say me, Buddha? Can you all say me whether you all understood up to now, guys? I hope you all can hear me clearly as well as the screen is clear. Did you all understand, guys? Right. So I hope you all got the basic idea there. Now I can actually write, okay, here. Right. So I hope you all can see this simple sum which is available, no? Right. So let me talk about this then bank reconciliation statement. Normally how to prepare such a sum. So look, they have given you a bank account, right? They have given you a bank account and then there is a bank statement also provided, right? So I hope you all aware that the bank account and the bank statement should provide the same balance, right? Okay. The bank account and the bank statement should provide the same balance, right? So here look guys, the bank account and the bank statement which is prepared. So normally who prepares the bank account? Put the bank account is prepared by the business. So normally who prepares the bank statement? Bank statement is prepared by the bank and then posted to the business. That's the meaning there. So end of the day, what normally we do is what we compare the bank account and the bank statement to find out whether the balances are same. If the balances are not same means we have to prepare bank reconciliation statement. So before we study right, how to prepare this bank reconciliation statement, let me explain you all Putta why there could be a difference between this bank account and bank reconciliation, bank account and the bank statement. So I can say guys, okay, normally the balance of the bank account, so I'm going to write as bank account balance, okay, if it is not equal to the bank statement balance, okay. So let's see then what are the possible reasons. So the possible reasons could be very simple. One, the business has omitted, okay, the business has omitted, or I can say the business has missed certain transactions, okay. So the business has not debited or the business has not credited certain transaction. The other reason guys, okay, other reason is going to be the bank has not added which is credited and the bank has not minus which is been by debited. So normally right before even we prepare, now normally here I'm going to teach you how to prepare this BRS using two steps Putta. But before even we prepare this, let's try to understand then why this bank account balance and the bank statement balance are not the same, right? So the reasons could be because the business has missed certain transactions and the bank statement has not recorded certain things, right? So there is another reason that because we are human beings now, so we might be doing some mistakes, errors. But these things are not errors, Putta. These are known as like omissions, and I can call this reason as what timing difference. I'll say why we call it as like that, and here we call it as what omissions. We can call them. I can call it as omissions, right? So let's see then what are the reasons normally that we do not record certain things, guys. Okay, I will say you all here very like frequently they give is something called with a standing order payment. Standing order payment. So let's see what the standing order payment, we can inform our bank to pay a certain amount from our account to a specific outsider. For instance, Putta, you all can understand something like this. I can say my bank to pay my insurance premium or my son's class fees or something every month. So the bank would be paying, Putta. The bank will be paying. However, in accounting, I hope you are aware of what I am going to say right now. In accounting, our accountant will not record without a source document. No? So even though the bank pays that, our accountant needs some document to confirm the payment. So assume there is no mobile phone because right now in these days, instantly we are able to get proof for the transaction. Just assume there is no mobile phone, internet, guys. So our accountant has to wait until we receive the bank statement to confirm that payment. So what's a standing order payment? The bank would have minused, but our business, our accountant wouldn't have minused it. So why it is not an error? Because the accountant is aware about that on the fine on the day they receive the bank statement, which is after the period, after a month. So that is standing order payment. And likewise, guys, you all know that we are given a checkbook. Okay, I'm sorry, I'm unable to like in the chat with you all using, I don't know whether you all can hear. So right, I'll just use the chat option here in YouTube, right? Okay. Okay, so that is standing order payment. Let me go for the next one, right? Okay, so next one is, look, something called checkbook charges, right? Something called checkbook charges, Puta. So what is checkbook charges, you know? Normally, guys, the bank gives us a checkbook and they do not obtain money at that moment itself. Over the counter, they will not charge us money. So they over the counter means we don't pay the money and obtain the checkbook. So what would the bank normally do, you know? For the checkbooks that the bank gives us, they would deduct an amount directly from our account. Okay, so therefore our accountant will know about that only after they receive the bank statement, which is end of the month. So until on the day they receive the bank statement, Puta, our balance and the bank statement balance will not be same. So the other reason is what? Checkbook charges. Likewise, for any other bank service, if the bank provide, they will charge a service charge, which is known as, we can call it as bank charges. Bank charges. So the same like that, any bank charge the bank would collect from us, they would directly deduct from our account. Our accountant will only be aware only after receiving what? The bank statement, right? Okay. And then any additions, you know, some of our customers wouldn't have paid us on time, so therefore they would ask excuses such as they would say, give us your account number, we will directly deposit to your account itself. So in such situation, when our customer directly deposits to one of our to our account, our accountant will be only aware after we receive the bank statement. The proof document is the bank statement. No? So you might be saying, sir, the customer would have sent us a slip through WhatsApp. I said, assume no mobile phones, no internet. So our accountant needs a proof document, which would be the bank statement, right? So, something called direct deposit, right? You would have heard a term called direct remittance. Direct remittance also we call it as the same thing, direct deposit. And likewise, any sometimes we can say the bank to collect one of our income. For example, we might be having a fixed deposit in the same bank. So that fixed deposit might be giving you an interest rate every month. That interest also could be collected by the bank and add to our account. So we might be aware that about the exact addition, how much they added, when did they add. So we might be aware only after we receive the bank statement, right? And then Puta, there is another two more, something called what? Dishonored check. But to understand a dishonored check, first of all, I have to make sure that you all okay with you all okay with understand you all okay with like the what the like we'll say the phase of a check. I hope you all understood like in a check what does this date means, because to understand unprecedented, unrealized check and dishonored check, you should be knowing how or what is recorded normally on a check. So I hope you all understood so far, right? Okay, let me pause for a while here. Make sure that people who are like parties in the meeting, actually though it's not a Zoom meeting, so I'll be meeting you all. We'll say as session two, right? In a little while, okay. Alright guys, okay. Alright, so let me go with this guys. So I said you all, for you all to understand, right, okay, for you all to, so as I said, like for you all to understand this concept, right, about dishonored check, unpresented, unrealized check, a student should be well aware about like a check, especially like the date that is written on the check, Puta. For example, we will say the date that is written on a check is, so today is February 21, ne? But we will say there is a date written on the check which is like March 15. So guys, just think like March 15, one of our customer only gave us this check. So today is February 21. So when we normally receive a check which is dated as like March 15th, our accountant will record it in the bank account. When we receive, we record in cash book. So today's date is February 21, Puta. The question I'm going to raise is, can we deposit this check today? Answer is yes. You can deposit the check today, Puta. You can deposit it. But you cannot encash it. You cannot get the relevant money to your hand, or you cannot like get the money to adhere to your account in the bank today, Puta. It will be done on like March 15th. So like let's understand what is this about. When we deposit a check which is dated in for the future, we would add it. So when we normally deposit today, our bank account would have added. However, the bank will not add. The bank will not credit. You know, when I say credit, the bank will not add. Reason, on 15th, on the date of 15th of March only, Puta, the person who gave us the check, from his account to our account, the money would be transferred. Or else, on that day only, the money is available for us, guys. So, therefore, as at February 28th, the closing date of February, our bank wouldn't have added that amount. So, what do we call such checks? You know, we deposited, so we added in bank account, but our bank has not added. We call it as unrealized check. The bank has not realized it as a deposit. So the bank would normally skip without adding that relevant check. So we call that check as unrealized check. And likewise, when we issue a check to a person, for example, we take the checkbook and we write and we issue a check, what we do, our accountant would minus credit in our bank account. But however, Buddha, only if that person presents, look at the word presents the check to the bank to obtain payment, the bank would minus no. Just assume I am giving a check for you dated today itself. But Puta, it is not compulsory that you should go and obtain the money today. You have at least 6 months of time or 2 3 months decided, but normally 6 months time. So you thought, let me go on like March 2nd, because the amount is just 500 rupee check. So you decided not to go during this month because you're busy with some other work. But when we issued a check, my accountant would have deducted the check minus credited in our bank account. Because you did not present the check to the bank before February 28, the bank wouldn't have minus Puta. That's why we call bank has not minus the checks we issued as unpresented check. I hope you all understood the reasons, main reasons why the difference, right? Okay, so I hope you all understood regarding this, and there are some requests of some students who are like they are unable to join the Zoom. I said them like right now I'm not going to go in Zoom. So let me do one thing. I will continue this. I'll inform in your group. So I'll make it as like part 1 up to now. How to prepare BERS with these sums. I have here. There are sums Puta, as well as I have included some past paper question discussions are also here. So I will discuss this question and I'll inform the date. Probably I'll be doing it tomorrow. After I confirm, I'll inform the date in that relevant group, right? So if anyone like wants to join that group, please text me, send me a WhatsApp message for this number, right? Okay, thank you, right?